Are platforms silently killing your trading profits? Well, I'm Manir, and in this episode of Systematic Shenanigans with Pedma, we reveal why most traders could be losing money on infrastructure mistakes that could have been avoided. After deploying hundreds of algorithms across futures and crypto markets, we're going to break down the pros and cons of using platforms versus custom code. We'll also touch upon some exact tax strategies that we've kind of come across, as well as one of the biggest benefits of automation in trading. Let's get episode 7 started. All right, so first topic for me this week is going to be the conversation around platforms versus custom code and which is better. I'll give you a bit of my thoughts slash the experiences I've heard. Um, for the most part, I'd say it does depend on what you're trying to build, but I would try and stay away from platforms as much as possible unless you really trust it. And that's coming from someone that runs like most of his strategies just from NinjaTrader, and it's because I trust NinjaTrader a lot, and I've kind of gone through a lot of their backend code as well, or at least what they show, and everything seems pretty logical. And then some parts I've had to custom build outside of it. But I've seen a lot of people try and use Quant Connect or different other versions, and then they'll run into either an assumption or some sort of limitation that inherently stops them, and then they have to go custom code anyway. So I wanted to hear what your sort of thoughts are, because I'm pretty sure you're all custom, right?
Yeah, everything that I do is custom. I build everything in Python and do some simple front end to help it manage, but everything is custom. But I have actually a good example. So in crypto, there was this company that I'm not going to name, so I don't get sued or something. They they were. Uh, how can I say it? They were not hacked, but there were a few problems on the back end and few orders and like transactions was happening on clients' accounts. It was basically a platform where they had algos like third party algos manage client portfolios, and then it started moving funds when it shouldn't. Very bad stuff happened at the time, and
Wow.
people, yeah, they completely went out of the market. So it's like I've seen all sorts of things, and I prefer to keep my stuff private and just custom build it. Yeah, it's harder. It takes more time because you have to build everything from scratch, and it's not a simple process. But it's much more flexible. If you want to run like a different kind of approach, even right now with this, like the model that I just launched today, that is a continuous model. If I'm going to launch this on a platform, I don't think any offered that, to be honest with you. So yeah,
Yeah.
I just like the flexibility of building my own stuff.
Yeah, no, I totally agree. I'll also say, like, I get the question sometimes, why did I move primarily from small caps to futures? And the main reason, even though that futures, the edge is a lot less, the infrastructure is way more built for algorithmic strategies. In small caps, it's just not as easy. You have to work with DAS. It's a huge headache. If you have plans of working with DAS, I feel sorry for you. But for the majority of it, is like NinjaTrader was so easy to work with, and I could deploy a lot of strategies. I could keep on testing a lot of things. And as you know, the research to deployment time is really important. If I'm stuck, for 2 months, 4 months trying to fucking deploy something on DAS, that's a huge limitation. Whereas in NinjaTrader, I'm pretty solid with it, and obviously that's taking time, but now I can get something up and running or tested really quickly, and that's really important. And I would also say it's a benefit as well of crypto, because I've seen from stuff you've worked on, and I've also started to work on stuff, is that crypto is quite nicely optimized, I think, for developers for the most part. You got a lot of nice luxuries that aren't actually available in traditional equities. So those sort of things can help you as well when you're even building, custom. I will say on platform side of things, if you are running something, if you know what the platform is good for, because I think platforms most of the time are going to be always within a limitation. So a really good example of this is Pro Real Time. I have nothing bad to say about that platform. It's a really solid platform from what I've heard for swing trading, and it's also made by a former market wizard. And if you're testing, swing strategies, daily strategies, those sort of things, perfect, amazing platform, at least from what I've heard from people that have been using it. But if you're trying to do intraday, it's not a platform you can really use for that. And I don't think that's necessarily, obviously I guess it's a downside of the platform, but it's not necessarily built for it, or at least not currently. So you can either do custom then for those sort of strategies. But if you know you're going to be working on swing strategies, then, Pro Real Time can be a great one that speeds up that development time.
Yeah, and I'm always paranoid about I don't know about that particular platform. I don't know if they're offline, if they are software on your computer or whatever. But I'm always paranoid about stuff like how how hard would it be if you have a really good strategy that performs for a staff member or someone inside like a coder or something to have access to your rules and stuff like that. So It might be paranoia from me, but I don't like that information to be public anywhere. If it's if it's on a software, everyone can look at it basically. So yeah, I just like to keep it private, and that's for the best. Now, if you're going, it's like you said, if you're going to run like a daily or simple weekly model or something like that, maybe you can start off with one of those platforms and iterate from there, because not everyone will be able to build like a standalone, like full-fledged platform, right? I remember you said like on small caps. That's funny because I remember towards the end of my trading of small caps, mostly automated like sending orders through Selenium and to trade zero. It was so bad, but it worked. So, but yeah, it's very bad.
Yeah, I would also say like that's actually a very good example because ironically, I had someone come for a project around that sort of thing around with Trade Zero, and while it's something that can be built, I didn't take on the project, and I really didn't recommend them they do that approach because if you're pushing any sort of real size or even important size to your current like net worth, there's going to be mistakes with that approach. Things can
Yeah.
really mess up with it. And it's not something I would ever really want to be deploying live capital on, especially not on something as volatile as like, small caps. Maybe if it was trading like SPY or something, I was trading small size and I was just kind of testing it as a project, then yeah, sure, maybe. But if you're trading something that's, parabolics or things like that, you do not want to mess up with something like that. So infrastructure, I think, and this was actually, I did a thread around Jim Simons, and like a key point about it was that he was cutting at the time for building really solid infrastructure for his research team and his like scientists, right? That might sound like a bit of a dismissible point for most retail traders, but if you're going into algorithmic or systematic trading, you need solid infrastructure. So you actually do need to consider, am I going to use a platform, or am I solid at making a custom code, or am I going to hire a developer, etc. Because if you don't have that solid infrastructure, at end of day, those are the things that are actually submitting your orders if you're running fully algorithmic. So if something like that messes up, then that's a really big cost.
Yeah, it's like, and you don't see that before you start doing the job, right? It's like having a really good restaurant and you have an awesome menu and actually the food is great, but your restaurant is pretty bad and everything smells and stuff like that. It's not a very good experience. The same thing with your own like infrastructure. If you are trading and everything is extremely bad and you can't even execute efficiently, you can have the best model in the world, you can have the best theoretical model on paper, on a backtest, whatever, but if you can't execute on it, what's it good for, So
Yeah.
yeah.
For my second point, I was actually going to say is like one of the biggest benefits of automation that I don't think is talked about as much is mainly the time freedom and the location freedom compared to just traditional day trading. I know a couple of great friends of mine that are also traders, and they went to Japan one time. And if you know Japan time zone compared to New York, it's kind of untradeable unless you're going to just stay up all night and that's how you're going to trade. Whereas like if you're running something that's automated, you do get that benefit where you can necessarily fall asleep and it would still be running. Obviously, you have to have trust in your systems, and to still some extent, I think it could be argued that you should always be observing and overviewing them. Depends what they are and how many trades are being taken, etc. But the big thing as well from automation that I've definitely loved, and I think probably you as well, is that because we don't have to be worried too much about executing all the trades, or we get alerts, etc. So much of our other time can be spent on research or something it's kind of like the phrase don't work in your business but on your business, if that makes sense. It's kind of like that's how I view kind of automation / systematic trading, because you're not in the daily of executing, you're more working on the actual edge, the actual strategies. But what do you think that's kind of one of the key benefits?
Yes, definitely. But I think that to get that at scale, you really need a team. Maybe, I'm saying like, maybe if you are a really good software engineer and you already have a good background, you can maintain everything running very smoothly. But from the experience of people that I see running like fully automated models, and from myself when I add them, I found myself, yes, true. Like I would go on holidays and I would have like it sending orders and managing my accounts while I was on a beach or whatever. But at the same time, I found myself a lot of times like just fixing weird bugs and updating APIs and stuff like that. And again, might be a skill issue, right? I'm not a software engineer, so I don't have that skill capability to keep everything. But from all the I'm saying fully automated traders. I'm not saying like hybrids. Fully automated traders, it's demanding, let's say. But yes, true. Like if you are trading a different time zone and you have something that works most of the time automated, great. You don't have to be there checking your orders every time, right? Even I'm running right now on a hybrid model, and I just have to click a few buttons and it's running on AWS. I can check from my phone if I need to put orders. I just click a button and it sends order to my account and stuff like that. So automation is definitely better than not having it.
Yeah, I'd say all your points are super valid. I definitely, maybe I should have phrased it better. It's not like you're going to be relaxing on a beach and completely stress free and like never check your system ever again. It's going to be sending you a paycheck every week or something. You're definitely still going to have to spend time. It's like I think the idea that people say passive income, like even necessarily investing in the SPY isn't totally passive because you still have to you'll have some mental fatigue from being that invested in the SPY, etc. Like end of day, something will always take up some mental capital, and I think that's still true for automation. But I do think, let's just give a really simple example. Let's say you were just doing like a open and close strategy, or you were doing something that had a trailing stop, right? If you were doing that manually, you would have to be sitting there watching the screen the whole time. Whereas if you had some sort of level of automation, you could at least have alerts or checks, right? And you wouldn't have to be sitting at your desk the whole time checking when when to actually exit. So that's more the comparison I was kind of comparing it to, compared to it being like, you're like fully relaxed and you never have to worry about it again.
For sure, fully agree. It's like even if you are day trading, if you have to be there at least for a few hours in front of the screen. If you have that stuff automated, you still have to check it. In my opinion, you still have to maintain it, but at least you don't have to be there like executing it by hand.
Yeah, I agree. Also, I'd say like a big point of it is the mental fatigue. I don't know about you, but when I used to trade manually, like sitting at the screens is this is gonna sound so pathetic, but yeah, I think people that have done it is like, no, it's true. It's very mentally taxing. Like if even if you're looking at charts for 5 hours or whatever, it's very hard to after that 5 hours do something that's more intensive on thinking or creative
Yeah.
or anything like that. It's a very taxing thing. Obviously, it's nothing like working 9 to 5, but at least mentally, it's very difficult to then work on research or work on improving your strategy or whatever. Whereas if I'm just checking in, it's not as much mental fatigue, and I can still be working on my research or something like that.
No, to completely agree. Like when I was trading by hand, like small caps, after the day, the trading day was done, I would also be done.
Yeah.
You are there like all day managing these swings in PNL and volatility and holds. Then you are checking like your friends on Discord and everybody. Yeah, it's a mess. I really think that it's like a job. I don't see you doing like very at capacity research after you have a day of end trading. But yeah, that's me.
Yeah, no, I totally agree. And then for my last topic, very boring topic, but I think incredibly important for any trader listening, is tax optimization. I think it's a really cool thing where it is almost, it's very hard to say where I would rank it on priorities, but it's got to be up there in the top three, give or take. Because taxes at the end of the day, if you make 500K or 100K or whatever, if your taxes are incredibly high, like 50%, 40%, that is basically slicing your profitability or your risk adjusted returns in half. At least that's kind of how I view it. Especially when I was in the UK, you get taxed quite highly because for most trading income, it's short-term gains. So those sort of things, it's just basically treated as normal income, especially if it's like your full-time job. And that can really hurt, especially because in some countries like the US, I think the UK maybe has something similar with like you can get some tax breaks if you've lost X amount and you can redeem X amount on your taxes, but it's never overall that much worth it to compare to reducing your tax bill, whether it be, I think in the US you have futures are slightly better tax adjusted. I think it's like 60% of profits are taxed as long term and then 40% are short term gains. And those are reasons I've heard from traders of why they've switched to futures. Because if they can get even like a sort of decent strategy on futures compared to what they were doing on equities, because of the tax savings, they just save so much money and actually have more profit at the end of the day. Or, at the extreme end, you can completely relocate like I have and gone to Dubai, because then my capital gains are zero and it's incredibly nice. And now I don't have to worry about a 50% tax bill at the end of the year and how that affects kind of cash flow. Even I think you were saying today that you talked to some tax consultants for crypto, right?
Yeah, exactly. Here in Portugal is a bit better because when you are trading crypto, at least there's a bunch of regulation. It's a very new space, and tax regulations are not very clear, and so you can get around, like you can be more optimally efficient with your taxes, but still, you are still taxed at short-term gains, right? So, yeah, it's like almost an inevitable drawdown at the end of the year you have to pay.
Yeah, I would also say like it's often people kind of think about it last, but when you do have your first profitable year or maybe like a really solid year, it hurts.
Yeah.
The first big tax bill I had to pay, it took me a couple. Hate to say it, but it probably took me a couple of weeks to maybe even 2 months to kind of like emotionally recover because we both know like trading and any sort of business etc is difficult to make your money and having to kind of give that all back depending on your country. Maybe some countries use taxes a lot better. I won't kind of mention for the UK, but it's still a very emotional event because you've dedicated maybe 3 months. That's maybe 3 months of your life or X amount of months to do a certain trade, etc. And then you have to kind of give half or whatever back.
Yeah, exactly. You made that point quite good. Yeah, I'm not going to get into like a tax thing here, but it's like you took all of the risk all the year, like all the risks, all the financial pressure and like volatility, and then at the end of the year you have to give it back for basically nothing in return. But
Okay, yeah, let's get into your first point.
yeah, so I, as I was deploying this model, so I've been working on this model on the back end, and I just deployed it today, and it's pretty interesting because on the on the back test, like you get a bunch of different things, and you find out the performance of your model and all that sort of stuff, right? But it's not really once you deploy it that you start to find all these different unique little things that are not found on the back test that make the model harder than you thought. And that always reminds me, like, the only way to me to really find out if your idea is real is to go into the market or whatever. I'm not just talking trading. I'm talking even in business and everything like that. You have an idea until you go to the market to find that out. I don't think you have a really like you have an idea if that will work or not. Uh, like the first time I traded in crypto, for example, I say this a lot, is like I didn't even have a back test for it. Yet I still made money, and I'm here today because I deployed that model without having a back test for it, not even an idea if it would be profitable. And to me, that's a really powerful concept because it is about going into the market and finding out if whatever you have is true or not. What do you think?
I have really mixed feelings. Like, first thing that always comes to my mind is when you go to this example, is it's like it is somewhat survivorship bias because I've gone into the market and my first thing was terrible and I lost a ton of, like, not a ton of money, but relative to how much I had, it was a decent amount of money, right? I think you are right to an extent. Like, if I have a back test and before I actually deploy it, like, obviously I can't say it's 100% going to work. You'll never actually know. I think maybe you can have a higher degree of certainty if it's something that's very of a course concept, right? Like if you're deploying a 200 MA trend following strategy, like that, it's probably going to work at some point, right? It may be a longer time horizon, but it'll probably work. So as a summary, I half agree, and I'd half say though, if you're going into the market though without any idea of if your strategy works, what most people will run into is a lack of conviction, which will just completely ruin their execution, which will then ultimately ruin the edge. And that's what played out for me, at least.
Maybe I'm talking, yeah, I agree with you. I'm maybe talking about my intuition, like if you gave me a model right now, I would tell you if it would work on the market or not, and I would be 90% confident in it. But yeah, true. For most people, they should. I'm not saying that that you should go into the market either, like that you should go to the market without any idea. But if you see something in there and it's pretty robust, you have a good intuition about what works in the market, just standing on a back test all the time and not testing it, I don't think that's a good idea long term. The real market it's in the real market.
Yeah, no, I would agree. If I had to sum it up as like Pedma's motto, is how I view you is it's what's the motto from Zuckerberg? Test shit and break shit or whatever.
Uh,
Like test so fast and break stuff. Like that's kind of how I view you. Is like you do some testing, and obviously because you've been in the market for so long now, you have better intuition of what works and what doesn't. But if someone's coming into it, I do agree. You should test something, then test it on live market, see if it sort of works, then keep on doing and iterating.
Yeah, because I see like you go on these forums, like the quant forums and stuff like that, and you start scrolling and you see all of these people developing models for like 6 and 8 months and stuff
Yeah.
like that. And I'm like, what the hell? During those 6 months, maybe you lost like 20% returns on the market that you wanted to trade because you were experimenting with this new theoretical thing. And meanwhile, the kid next door just running as like a funding arbitrage models on an Excel is making money, and you are just like, yeah, you are just playing with numbers on a screen. I'm a real big believer about like practical experimentation. But yeah, you need intuition. Exactly. You don't want to be putting like your entire fund, your entire portfolio into a thing that you don't have any idea if it's going to work. That's not what I'm saying. I'm just saying that the truth is found in the real markets, not in your pack tests.
Yeah, it's kind of like the phrase of people saying like you have what's it like practical procrastination of like people that watch a ton of YouTube videos or people that save a ton of books, etc., but never actually take action on them. Like I feel like it's the key word is action, right? Like you do have to go through the knowledge side of things, but then you actually have to deploy and actually take action on it, which I think most people are scared about or they're maybe overthinking it. At least for me, the best way that I found to overcome that um, is I just try and take action as the quickest point possible, if that makes sense. So, and also I like to chain them. So I really hate being interrupted if I'm working on something. So if I'm doing if I have an idea, let's say for today, whatever, if something comes into my brain or I've seen an article, I'll backtest it. I'll see if it sort of works. Then I'll go from there into the next chain. And then I'll be like, okay, if possible by the end of the day, then if this actually looks like something decent, then I'll maybe try and deploy it on a sim account or whatever, or deploy it on a $100 account, whatever. And then kind of get some action and then feedback from there. And then I can let it deploy for whatever month to 2 months, get feedback from that data, and then kind of go from there. But the key thing is like to take that chain of action so that you don't get stuck in between. Because at least for me, if I get stuck in between, then it becomes a project I never do. I have a couple of projects like that I have a folder for them. I have like half written code, but I've just never gotten around to finishing it.
Yeah, the game taught me the game. It's a phrase from Jesse Livermore.
It's a great phrase.
And yeah, I know he blew up in the end, and all the volatility that he like all the volatility that he took during his life, he went bust many times. Like, but one thing you can say about the man is that he wasn't a real trader. Yeah, this also I think merges very well with my next point. Is like last week we were talking about funding, and I checked. I was as we were doing this podcast last week, I was looking into like my usual scans of funding. I saw an opportunity. I was like, you asked me some question. I don't remember what it was, but I was talking, and at the same time I was talking, I was like sending 20K through like a bunch of wallets, bridging tokens from this wallet to the other protocol and stuff like that. And so and I think it merges really well with this point is that like I was just experimenting, I'm running this strategy. I saw an opportunity. I just bridged the tokens and took the opportunity from there. I didn't have a model for it. It just you are just basically doing a carry trade where you are getting paid for your liquidity. And then I was edging my position with a spot exposure. Yeah, to not get much technical here, but I was basically trying to put on this delta neutral trade as I was speaking to you, and it was pretty interesting.
I remember after you told me after the podcast, I instantly had to think back on like where we've kind of come from. I just found it so funny that back in the day, I like obviously I didn't know you when you first started out trading, but we've talked about it a lot just because we talk about our journeys and um, sending 20K kind of nonchalantly while just randomly talking to me on a podcast. I just think is a very key sign of how far you've come and how far I guess we've come as well. Because like sometimes I look at the amount I go into drawdown, I'm just like, I don't know, back in the day, that would be a half a year, maybe even a year, depending on what kind of job I had, salary. And it's just insane that that can be the money we sort of deal with nowadays. And also, I think it's a key point for anyone that's kind of growing their account. It will catch up on you really fast. One thing I regret so much is I didn't document the beginning. And I think it's because ultimately at the beginning you don't think it's, or maybe you have conviction that it might work out, but there's, at least for me, there was some part that I wasn't 100% sure. So it's kind of scary to document, because if you fail, then you kind of just have documentation of like you failing. But I think it's always plus EV to document, because if you fail, then hey, it's cool stories. You can be like, oh, look at this time where I was trying to trade or whatever. And if you do succeed, then it's awesome, because you have that kind of first journal or logs or whatever from those early days. And I have some of my early, I think it was maybe a year in, I think I started journaling and stuff. Those journals are absolutely dreadful, by the way. I don't know if you've ever looked. Did you journal back in the early years?
Uh, uh, it was very on and off. I just put the trades on an Excel sheet.
Oh, fair. Like you never did the. I got fully. This is actually one last good topic. I got fully swamped into the idea that I had to like journal my trade, say why I'm taking the trade, say like how I felt on the trade, say how I felt afterwards, etc. Did you never do that?
Uh, I don't remember. Maybe I did it, but it was very sporadic. But I don't remember like doing it consistently.
Interesting.
I was just going to say like it was not because I was smart or something. Smart because I thought it was a dumb idea. It was just laziness.
Fair. Like as you know, for me, I'm quite consistent. So I think I did it almost every week or every day, depending on what kind of journal it was. But I wanted to ask the question: do you think journaling is a key part of trading? Because on a retail side slash what people push, it's a huge part, right? Like everyone says you should have your journal, you should document every day, you should talk about your trades, etc. For the past, god damn, how many years? Past four, maybe three. Yeah, 3.5, give or take, years. I have not entered a single journal. Like obviously I have my performance, like P&L, but like I don't have a written journal or anything like that. Do you?
No, I never had a journal, so it must not be essential, or at least not for us.
Do you think it's a do you think it would still be a net positive of having, or do you think it's just ultimately a waste of time? Because like in my opinion, I think if you're struggling with something like mentally, then it can maybe help during that period. Like I remember sizing up, writing down what I was thinking about and like what I could do to help sizing up, kind of helped solidify my thoughts, but it wasn't like something I was doing every single day or something like that. I think ultimately, if you don't actually have a current problem at that time, or if you're just trying to trade systematically, a journal is kind of pointless. I would agree.
Yeah, I think it's not useless. Like, I think the problem is different. It's different for the type of trading that you are doing. Because,
Yeah.
like, for example, if you are taking every decision on every trade and you are making decisions on the go, maybe it's good for you to record why you took that decision, what are the levels, what are you seeing, stuff like that. If you are purely discretionary and you are good at it, okay? And that should, I would argue that maybe you should record what you are seeing so that you can see patterns on your belief, like on your behavior and why you take those decisions. But for us, in terms like every trade is automatic. I know why the model took this trade, right? Or why
Yeah.
I took this systematic trade. So it doesn't make much sense to me saying, oh, there is a crossover, so I took a position. That doesn't make any sense. It's just a waste of time, in my opinion. Now, I do have journals for the high level stuff. Okay, so everything in regards to business, I like to. I have like a little book here in my house that I just write whatever I learned or the
Mm-hmm.
lessons that I learned from stuff like that. And I have a book that goes back almost 1 year, almost 2 years in a bit. So, and for example, if I'm developing a new model, I also like make a thesis, let's say, on that journal about it. So I journal a bit, but it's more the high level stuff. Why I'm making this decision.
Fair. I also think this kind of goes into it because I guess it's documentation, but we're both ironically sort of like accountants. So I think maybe we take this for granted. But I was talking to one trader recently, and he said it was a really interesting idea that he hadn't thought of, but I guess it was sort of apparent to me at least, was that you should kind of have a journal or an Excel sheet of like your P&L plus like any expenses you've done around trading, meaning that you're just treating it as like a business, right? Like if you're paying for a certain platform, data subscription, etc. Like I keep a full thing just so I can keep logs of everything, obviously because I have to do it for accounting purposes as well. But it's a really solid method to really understand how much is going in and out of your trading, and then you can kind of get a full picture of everything. It's not something that needs to take up that much time. Like don't dedicate more than probably, I don't know, 5-10 minutes or whatever to just reconcile it. But it's something that's really interesting to look through, and also it'll keep a record of everything since you kind of started. Because there's many things I think when I first started that I was buying small books, things here and there, and I've kind of had them all tallied up. So ultimately, I did it because then I would know when I was fully profitable, meaning that I had broken above break even plus all expenses, etc.
Yeah, that does make sense. And in terms of like losses and lessons and stuff like that, you paid for those lessons, right? If and I see myself, I notice in myself that I forget a lot of those lessons over time. And
Sure.
if I don't record them, like they are gone through time and I already paid for them. So sometimes I like to revisit those logs and see what I was thinking and how my thinking shifted over time.
Yeah, I would definitely. I actually saw. Did you see the post by? Oh, I've forgotten his name, but it was a great Twitter post where he was saying that as you get more experience in trading, you become like a cruise ship, and it's very difficult for you to maneuver because you have so much overall experience and bias because of that trading experience, right? And I think this is one thing that sort of ties into it is that if you have paid for a loss, noting it down and remembering it and having some way to reflect over it can be very important. Otherwise, you kind of make a human bias of these sort of lessons, but you actually don't know if those were the actual lesson you had on that day of that loss, because over time they can all get meshed together or some sort of other bias comes into it. And I think trying to stay, I think the post was around like being like sort of like a speedboat, etc. Depending, can be very beneficial because you can switch ideas and switch lanes and also adapt quicker. Whereas if you're someone that's been trading a long time, it's a lot more harder to do that. And when you're starting out, it's actually one of the easiest things.
Yeah, completely agree. Uh, Completely agree. I think that a lot. I was about like we started a bit negatively on the journal, but
Mm.
as we are discussing this, I don't think it's a negative thing depending on what you're doing. Again, we are doing systematic trades, and I'm not logging like the traditional discretionary way, like logging every trade, but I'm logging all high level stuff, and that's important in my view. Just as you learn through life, you should record, in my opinion, everything, like both the successes of what you did well and both of the negative stuff of what you did wrong. I do that in business. In business, we discussed this a few months ago even. I was having a downturn in my business and I noticed it, and I right away noticed why, because I had already had a downturn for the same reason, and I got back to the same solution I had back then, and I completely reverted it once again because I had already learned the lesson and I had it recorded. So I think that's very important.
Yeah, no, I totally agree. It's the same way in trading that like understanding why your system or strategy goes into a drawdown can be incredibly valuable, even though it doesn't necessarily change that you're in a drawdown. It's kind of like I like to describe it as when you have a health condition, but you have no idea what the issue is. But when you know
Yeah.
what the issue is, it's very relieving. And I think that is a really key part because I used to make so many mistakes in drawdowns because I'd be like, why is the system in drawdown? Is it no longer working? Is it blah, blah, blah? And when you realize, oh, okay, it's because of this sort of natural thing that's happened, whether it be a market regime change, etc., it's a lot more comforting. You can kind of stay through it a lot easier.
I'm actually adding, we are already in 40 minutes and maybe we are getting a bit extended on today's podcast, but I'm going to add it to next week so we can talk like diagnosing the drawdowns, because I think that's, you just made that a very good point. Like a lot of people go through losses in their trading and they think like, oh, maybe my system is not performing or whatever, but is that the real cause? And I went through that as well. And usually you can diagnose why is your models going like losing money basically, and if it's your performance or is it the market's performance, and then you can diagnose. You become, as a trader, you have to be diagnosing your own performance all the time. You become more like an operator, like managing your own exposures and stuff like that. You are not like, losses don't matter. What matters is your relative performance to other stuff. But that's a topic for another day, I guess.
Yeah, we can leave it for next week. I'm already thinking about how you basically view trading as like a self-analysis sort of thing. But yeah, we'll leave it for next week.